everyone. Today we are going to start on 9.2, which is accounting for merchandise purchases. So, our objectives for today are to describe accounting procedures used in ordering merchandise, discuss the purpose of a special journal, and journalize purchases of merchandise on account using a purchases journal. So, in chapters 1 through 8, we were doing all of our accounting as if we were a service business organized as a sole proprietorship. As we mentioned in the last section, we are transitioning to now doing accounting for a merchandising business organized as a corporation. A merchandising business is going to have inventory. They're not selling services, they're selling merchandise. And so, inventory is a list of assets, usually containing the value of individual items, and merchandise inventory are the goods a business has on hand for sale for customers. So, before we were not selling inventory, we were selling services like lawn care or a salon or something like that. Now we are going to be selling merchandise like a clothing store or a home improvement store, things of that nature. Now, there's a couple of different ways to keep track of inventory. So, perpetual inventory is an inventory determined by keeping a continuous record of increases, decreases, and the balance on hand of each item of merchandise. So, in this type of system, purchases are recorded in the merchandise inventory account, a new account that we did not have to have previously because we were selling services. Periodic inventory is when a merchandise inventory is evaluated at the end of the fiscal period. This is going to be easier than the perpetual method because it doesn't require records of the quantity and cost of the individual goods. There are some computer systems that will do this for you, but they're not always accurate and things can go wrong. The physical inventory is when a periodic inventory is conducted by counting, weighing, or measuring items of merchandise on hand. In a periodic inventory system, purchases are recorded in what's called the purchases account, and this is a new account that we did not have to utilize previously. Now, cost of merchandise is the amount a business pays for goods it purchases to sell. The cost of merchandise is recorded in the purchases account. Um, Purchase is only to be used for merchandise. So, for example, if you see in a transaction like purchase supplies, yes, it has the word purchase in it, but it's not going to go in the purchases account unless you intend to sell those supplies. But if they're just supplies for running your business, then it's not merchandise that you intend to sell. The income statement of a merchandising business is going to have that account purchases in a section titled cost of goods sold. So, this is a new section of the income statement that we didn't have previously, and this is going to be separate from your other expenses. Now, there are new source documents that we are going to be utilizing. So, a requisition is a form requesting the purchase of merchandise, and a purchase order is a form requesting that a vendor sell merchandise to a business. This is an example of a purchase order. You can see the different parts of the purchase order. Sorry, let me go back real quick. So, the different parts of the purchase order, it has the name of the company, who you're purchasing from, it has a PO number, who you should ship it to, it has quantity, stock numbers, description, total prices, all of those things. So, this is an example of a purchase order that we will be using for transactions that we'll be dealing with in a little bit. All right, so we're going to move on now to introduce what's known as a special journal. So, a special journal is a journal used to record only one kind of transaction. Previously, we were just doing um, when we were doing special journals, when we were doing chapters 1 through 8, we were just using a general journal, just one journal that all of our transactions got journalized in. But if you have a really big merchandising business, you might want to keep track of similar transactions. And so now, what we're going to do is we are going to split our journals into 5 different journals. So instead of one journal, there's going to be 5 journals. The purchases journal is going to be for all purchases of merchandise on account. So anytime you purchase something that you intend to sell and you make that purchase on account, this is going to go into the purchases journal. We're going to talk about that today. Um, the cash payments journal is for all cash payments, and we're going to talk about that in sections 9.4 and 9.5. The sales journal is for all sales of merchandise on account. And we're going to talk about that in chapter 10. Also, in chapter 10, we're going to talk about the cash receipts journal. That's for all cash receipts. And then the general journal, we're going to revisit that again in chapter 11. And we're going to talk about the transactions that you would put in the general journal for specifically for a merchandising business, and we're going to touch on some transactions that we didn't visit in chapters 1 through 8. So today, like I said, we're going to focus on the purchases journal. So a purchase on account transaction is a transaction in which the items purchased are to be paid for later. The purchases journal is a special journal used to record only purchases of merchandise on account, like we just talked about. And these purchases journals, or these special journals, are going to have special amount columns. And a journal amount column headed with an account title, it's going to be for specific accounts only. And we will see that when we look at the purchases journal here. So you can see, I'm going to go back a second, that this is what the purchases journal looks like. It has a date, it has the accounts to be credited, purchase number, post reference, similar to the general journal. But here in the general journal, we would have a debit column and a credit column. In the purchases journal, we have it says purchases DR and accounts payable CR. What that means is every single transaction that goes in this journal is going to have a debit to purchases and a credit to accounts payable. So you only need one column. A couple of additional terms we need to be familiar with before moving forward. The first is a purchase invoice. That's the invoice used as a source document for recording a purchase on account transaction. Then we have terms of sale, which will be on the purchase invoice, and it's agreement between the buyer and the seller about payment of for merchandise. And then we have the due date, which is the date by which an invoice must be paid. All of that information must be paid attention to on the invoice. So when you have an invoice, you're going to record the initials of the employee processing the invoice, the date it was received, and the purchase invoice number in the stamp. So you can see here we added that information. Then you're going to place a check mark by each of the amounts in the total column to show that the items have been received and that amounts have been checked and correct. And then you're going to review the vendor's terms and the payment due date. When you record a transaction in the purchases journal, it's actually very simple. So it says November 6th, purchase merchandise on account from Win Lighting, $1,082.50, purchase invoice number 525. So you're going to start off by putting the date, then you're going to put the vendor name. So this would be just like if it was accounts payable, Win Lighting. But now we know that we have accounts payable here, so we're just putting the name of the vendor. So Win Lighting. The purchase invoice number is just going to be the number. You do not have to put the P in front of it because every single transaction that's journalized in this journal is going to be a purchase invoice. So you just have to put 525, and you can see that this is headed by purchase number. And then we're going to put the amount. That amount will be both debited and credited. So it would be just as if we were in the general journal doing purchases would be debited and accounts payable dash Win Lighting would be credited.